What is the market telling me this week? Welcome to the Nick Rutherford Report, and the market is either going to take advantage of you or you are going to take advantage of the market. Hit that like button, subscribe to this channel, share this with someone who would get a lot out of it, because this is the place to be for the financial news that matters for your net worth. Before we get started today, I want to remind everyone that it's okay to lose money, because everyone loses money sometimes. But here's the thing, the best investors in the world lose a little when they lose, and when they win big. So let's look at the market, and it's going to tell me what to do. There's some really interesting data that's come out this week. On one side, I'm completely freaking out, and on the other side, I'm not worried at all. What is it telling me, and what are we doing about it? Let's get into it. Market is looking pretty nasty out there. It's looking a little crazy. We've got big mega caps down 10%. We've got news articles coming out like stocks, crude, bond yields plunge as growth scare sparks surge in rate cut hopes. Well, you're probably seeing articles that say it's a bloodbath. And you know what? I want to look at the data, because the data is going to tell me what to do. And we've got some really interesting data that's come out this week. But first, I want to talk about a few headlines, because we've got the U.S. futures, global stocks tumble, Japan crashes amid panic. And people are saying the Fed is now behind the curve because, well, the jobs came out and the unemployment rate is terrible. Well, you know what? The Fed had the unemployment rate, I can't speak correctly today. They had the unemployment report in their back pocket, so they must not be too worried. Let me continue here, because this is the biggest, or one of the two biggest themes this week. The recession triggered. Payroll miss huge, up 114,000 is soaring unemployment rates, activates the Somme recession rule. And this is the rule that states when employment rises at a certain rate every time there has been a recession. And you can go Google that rate. I'm not going to get into it here because it would kind of go off on a tangent. But what's most important is you need to know that it's triggered this rate. So now it's Wall Street's time to manipulate you. And one other thing that I want to point out before I get to the data here is this article. $1 million starter home is now the new norm in 237 American cities. Is inflation dead? I doubt it, not if the starter home costs $1 million. So what is one to do with all this craziness? Well, I want to talk about what happens next and what I'm doing about it. Because to me, the data matters, and there's two diverging paths that I see right now, and this is very crucial. So I want to talk about what I'm seeing in the market and what it's telling me. We've got leaders like NVIDIA, and this is just a quick thing that I want to point out. If you look at the price you're paying for NVIDIA's cash flow, right now it's at 68 as of yesterday. And if you look at this graph, we're kind of in the normal range. So this huge drawdown is in the normal range. So I don't really think that I'm going to be freaking out over this. Now, I do want to point out unemployment. So the unemployment situation for July just came out. The unemployment rate rose to 4.3. Now, if you're modeling the economy, this is the time that I would be freaking out, because the rate of unemployment is accelerating at the same rate that it has consistent to past recessions. Does this mean we're going to have a stock market crash? Does this mean the economy is going to slow down to a crawl? Well, there's some interesting counter data that I want to point out, and then I'm going to talk about at the end. I'm going to wrap up with what the market is telling me and what I'm doing about it, and the two paths that I see. But this is really rising to the level of freak out. But I want to talk about the one single very important counter argument that I'm looking at, and I'll talk about what I'm doing with my money. So let me just try to arrange this graph in a way that we can see. So this is a graph that is very important that George Robertson sent me. And here is the graph. You can see the fiscal, the monetary, the total and the NGDP and the NGDP in 8. So what this means is fiscal and monetary stimulus and how it affects GDP. And what I want to point out here, I'm just looking at the screen here, is something very important. This lower line here next to my mouse cursor is, let me get this on the right screen here, just to make sure everything is working correctly. Okay, now we can see the graph pretty well. So this lower line right here is what I want to point out versus the blue line. The blue line is the fiscal stimulus. So this would be the government spending. And you can see during COVID, the GDP crashed and we had massive fiscal stimulus. And then a little bit later, GDP went up and it peaked here, and then it started to come back down. So you can see that there's a lag time in between the fiscal stimulus and its effect on the economy. This little lag here. Well, now let's look at the fiscal stimulus here. What happened after the plague? Well, it crashed down and then it rebounded. So if you look at this, the GDP crashed down, it rebounded here from this fiscal stimulus, and now it's gone down just like this. And now it looks like we had some other fiscal stimulus, and it's about the time that it should filter through on the lag. So if I'm believing that money, that all this government money is going to cause GDP to expand, and there's all this money sloshing around in the system, then guess what? GDP is about to expand even more because of this lag, if you look very, very closely at this graph. And you know what? All of Wall Street is saying, oh, it's time to freak out because unemployment is rising, and it's time to freak out because of Iran. Whatever reason they're talking about, they're saying it's time to freak out. The recession is here. But if I zoom this to the very simple concept of money is going to create more money, then this fiscal stimulus should shoot the economy even more rapidly into an acceleration over the coming quarters. And right now, this is what the market is telling me. Why is it telling me this? Well, it's telling me this because of the fiscal stimulus. And it's also telling me from a number of other pieces of data that I want to point out. So let me get back here and just reset my screen here so we can see everything. So here is the net income for Microsoft. Microsoft is one of the biggest companies, and they just released earnings. Last 12 months ended in June 30th, they made $72 billion in net income. This same time this year, it's $88 billion. Let me continue on the data here and move it along. I just have to reset my camera to make sure everything's right. All right, so you can see that their net income increased 10%. And their diluted earnings per share was up 10%. I don't care about this constant currency basis. I'm just trying to point out a few things. Yet, oh no, the market is freaking out. Nvidia is down. Let me get this. Just moving that whole graph just screwed up my whole presentation, but that's all right. We'll get back to it. So, oh no, Nvidia's down. The AI bubble has popped. That's what the news is saying. Well, hold on a second here. Let's look even closer into the data. To me, I got to ask myself, is unemployment really going to affect Microsoft's spending? Because if Microsoft is building huge amounts of data centers and they're buying NVIDIA chips, does NVIDIA go up? Or is this just an air pocket? And is it just designed to have Wall Street scare everyone and take their money? See, NVIDIA's down, but let's look very closely at the rate of change of the CapEx for Microsoft. So here we go. Capital expenditures in Q1 for Microsoft was $9 billion here. $9 billion again in Q2. And then in Q3 it was $11 billion, up 10%. And then Q4, for some reason their Q4 just ended in July right now. This is the one they just reported. It's up to $13.9 billion. That's almost $4 billion higher than it was 4 quarters ago. That's a huge increase. That's huge. It's like 40% above the $10 billion. So to me, I have to ask myself, are the themes still intact? Is the economy becoming more and more digital? Are we building more and more data centers? It's clear we're building more and more data centers. So what does that mean for earnings of all the stocks that have been doing well? Like the big techs, all of the chips. And I know for the last few weeks they haven't been doing well, but for the last year they've done well. And they're still spending money on this. Is AI going to disappear? I was watching a podcast with Bill Gates, and he said there's at least 2 more turns on the upgrading of AI before it's done. So do we really think that we're all done and there's some sort of big crash? Well, the market is telling me from the data that there isn't. But the jobs report and the unemployment report is very, very concerning. So we'll wrap up with what the market is telling me, but my point here is the S&P is in a downtrend right now, but is this a permanent downtrend? And I think there's some sort of event that's about to happen because the market is really, really tanking, and we've got this Iran thing going on with Iran planning to launch drones at Israel because of this assassination that just happened. So everyone's freaking out. And why is this important and interesting? Well, because gold is like the only thing up. Everything else is down. Oil's down, at least as of this afternoon while I'm recording this. 2 hours later when I publish this to YouTube, who knows what will happen. But what my point is here is the markets are tanking because of uncertainty. There's this new theme that AI is dead. Clearly, if I look at the data, AI is not dead. This is out of the realm of possibility. Like Microsoft earnings are up and data centers are up. So this tells me that Nvidia is just going to keep cranking out monster earnings. Now, of course, I could be wrong, and the unemployment is very, very, very concerning. So what the market is really telling me, and to sum up this video, I really only see 2 situations from here. We have unemployment getting worse, and the market continues to go down, or the fiscal filters through and propels the market higher, catching everyone off sides. So if I was a conservative person, if I needed to spend my money and protect my money, and I needed to spend it in the next year or 2, I'd be very, very cautious right now. However, if I didn't need to spend it, and I could stomach the volatility of things going down 30%, 40%, 50%, who knows with these chip stocks, then I would bet on the fiscal. My crystal ball is not fully working today, but I'm just trying to uncover and peer through all of this craziness because it clearly seems like there's some sort of event going on here. And whether it's just the market trying to take advantage of everyone, or this really is the job market inflection point, it's unclear because GDP just came out at 2.8 and all the earnings data that I'm pointing to looks tremendous. It looks great. So it's really hard to say. And at the end of the day, if I'm invested in things where their earnings are going to go up, eventually I'm going to be right. So I think that from this perspective, what I'd be paying attention to very, very closely is your time horizon. Because if I'm thinking about my time horizon, that's going to allow me to make decisions. If my time horizon's soon, I'm going to be way more conservative. If my time horizon is later, well, do we need more AI and more chips later? I think so. Is the CapEx expanding? So are NVIDIA's earnings going to go up? I think so. Now, I'm just making my best educated guess based on the data. And your job at home is to look at the data and not be taking advantage of Wall Street. So right now, I'm still long, but I reserve the right to change my mind immediately because things are looking extremely dangerous. We've got the 2 different sides of the data. And there is no right answer because no one can predict the future. But all you can do is position yourself based on the most probable outcomes. And it's very unclear to me if the labor market is going to really tank this economy or this time is different from the fiscal stimulus. Got to get my right word out there. But my point is, I look at the fiscal stimulus and everyone with their old models about recession were wrong last year. So are they going to be right this time? I don't know. What I'm going to do is I'm going to continue to be long. And if things continue to deteriorate, I'm going to lose more money. If things reverse, I'm going to make even more money. So I haven't made up my mind about what to do yet, except right now I'm doing nothing. So I'll leave it with that, and I'll come on next week, maybe sooner, or later at the end of the week, depending on if there's any big announcements. But I just wanted to talk through all the data and go through what the market is telling me right now. And this is what it's been telling me. You're going to have to look at the data and make your own decision of what it's telling you. Have a good week. I'll talk to you soon. How am I using this information to protect and grow my wealth? Go to highreturnlowrisk.com.